Hi, everyone. Welcome to the 148th episode of the Timing Research Show for August 7th, 2017. My name is David Kosmeter. I'm the creator of Timing Research. Today we will be discussing the 202nd weekly report. So if you haven't had a chance to take a look at that yet, just go to TimingResearch.com and download that or any of the past reports there. I have Hanna back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Great to be back, and I'm glad to be back with the three guys that are here. We've all been together in the room. I'm not sure all at one time, but I've talked to Jim Kenney. We had from Options Professor, Andrew Keene from Alpha Shark, and Fausto Pugliese. Fausto's from Cyber Trading University. So it'll be great to talk to all you guys again. Always get some good ideas and some interesting conversation from you. So this will, I'm looking forward to this. Why don't we get started? You guys can, for those that haven't spoken with you before, haven't listened to you, why don't I just let you do a little introduction on yourselves, and you'll just go in the order I got on my paper there that I just put down. So, Jim, I'll let you go first. Tell us a little bit about yourself and about Options Professor.
Test. Option Professor has an educational DVD course, basically for beginners, intermediate, and advanced traders. And I was the content provider on that. And basically, we try to go over the uses and risks of all the different strategies for cash flow strategies, as well as hedging, as well as speculation. So it's a good one-stop shop to become acquainted with the uses and risks of the options.
Excellent. Thanks, Jim. Andrew, how about you? Can you tell us a little about your work at Alpha Shark and your background? I don't know if Andrew's not hearing me or if I'm not hearing him, but I'll skip down to Fausto, and maybe Andrew's mic issue will get resolved. Fausto, can you give us a little bit of background on you?
Sure, no problem, and thank you for having me back here again. Just wanted to tell you a little bit about me. I've been in business for over 25 years. I'm one of the original SOS bandits, aka day traders that started. We specialize in day trading and swing trading, very little options, but I'll keep that for everybody else to focus on that. I'm specifically a day trader. We do two things here. We not only just educate and run a school teaching people how to trade the markets, but we also started the first trading room, online trading room, that help collaborate with traders around the world. So not only do we teach, but we also run a trading room also. And been doing it ever since, and love it ever since. That's why I'm here.
Awesome. Thanks, Fausto. I'll give you a little bit of background on myself. I am hearing some background noise, and if you're typing, it's you. So just a click every once in a while. I don't know. It may be Jim or Andrew or Fausto, but if you could mute your mic in between talking, that might help. Anyway, I'm Hanna from InvestiQuant. I've been around a while. I used to write for trading markets back in the early 2000s. I've been trading full time since 2001. In 2008, I started QuantifiableEdges.com, and I still write for Quantifiable Edges and run that site. And then in 2012, I started OvernightEdges.com, and that merged with Scott Andrews' Master the Gap site, and it became InvestiQuant. At InvestiQuant, we look at everything from intraday to overnight trading to swing trading. And I do a lot of swing trading type stuff, both there and at Quantifiable Edges. So this is kind of in my wheelhouse as far as the things I study looking out over the next several days. Andrew, are you there? Can you hear me? Can we hear you? All right, it appears we still have a little bit of mic issues with Andrew. So why don't we start? We'll get into the questions, and whenever Andrew's able to link in, then I'll let him talk a little bit more about himself, and he can get into the discussion. For now, Jim, why don't I start with you again? Actually, why don't me, you, and Fausto just kind of go through quickly, and we can let everyone know where we stand, and then I'll go back to you. You can give me your explanation. But 1 to 2 word answer: are you looking for the market to move higher or lower from Monday's open to Friday's close this week? Jim?
I can't hear anybody.
Is that Andrew?
I'm guessing it is. Andrew, David, if you could ask him to log out and back in, maybe we can get him then.
Yeah, I'm trying to. But
Okay.
I can hear everybody now.
Andrew?
Yeah. Yeah, can you hear me?
Yeah.
Okay, sorry, I just had to change one of my settings.
Okay.
Okay, great. All right, we were just about to get into the questions, Andrew, but let me let you give you a chance to introduce yourself. Andrew's from Alpha Shark. He's been on the show a number of times. But for those that aren't familiar, could you just let us know a little bit about your work and your trading?
Yep, Andrew Keene. I was a market maker at the Chicago Board Options Exchange for a decade. From when I graduated college, I launched my company as KeeneOnTheMarket.com about 5 years ago. We rebranded to AlphaShark.com. Companies divided into subscriptions and products. The biggest one is people pay money to watch me trade during the day. I'm a very active trader. I have big P&L swings up and down, hopefully more up than down. And then we have 14 educational courses on demand in DVD. We sold over 10,000 of those courses. And then we have 10 proprietary based indicators for Thinkorswim, TradeStation, and Ninja.
All right, great. Thanks, Andrew. All right, we were just about to get into our 1 to 2 word answers on if we're looking for the market to move higher or lower from today's open to Friday's close, and then I'll go back through and ask everybody for a deeper explanation. Jim, where are you sitting at this week?
Well, I would say basically it'd be up with holding your nose when you say up, because it does seem like it's a little tired up here, but it doesn't look very weak. So without it taking out 2460 or without it showing any weakness below last week's low, neutral to higher, maybe going after that 2484 high on the S&P, they might want to try to do that. Not a whole lot of news on the docket that might make it move.
So, hang on, Jim. Don't go too far.
Oh, okay. Basically, I would say up with
leaning higher.
Yeah, up with a holding my nose. My confidence level is probably 50-50. It's probably binary at this point.
Okay. All right. I'll come back to you in a minute. You can give a deeper explanation.
Sure.
Andrew, what about you? You looking higher or lower?
Yeah, I would agree higher. I would go above 50 to 55%. You know, the market's not really moving that much. We have rallied from the open, so we have a little bit of cushion to the upside. You know, when the VIX is trading 991 on the spot, there's just not much conviction either way. The ranges in the S&P has been unbelievably small intraday. And then if you look at how we've actually traded over the course of, I think I looked at it like 17 days, we've been in like a 40, let me look right here. So we've been from 2445 to 2480 in like 17 days. So I would say higher, but about 55%.
Okay. Fausto, how about you? You looking higher or lower?
I think it's going to go a lot higher. I'm probably more confident and put my odds up to like 60-70% on that. You know, we're breaking all-time highs, and when you break all-time highs, there's nothing to hold it anymore. I mean, when you're comparing it to the Dow, compared to the S&P, I mean, S&P hasn't really gone that much, but the Dow has a better trend than the S&P has been going. But as long as that crazy man in North Korea doesn't do anything dumb, I think we're going to go a lot higher. Okay.
All right. I am with the rest of you guys, unfortunately. I'm looking higher as well. So let's, I guess we'll get into the details, and maybe we'll be able to pick some holes in it. Oh, my confidence level, I'm looking at it about 60%, which is pretty high for me. 61% is my overall confidence level based on the InvestQuant 5-day projections. So, Jim, I cut you off.
Yeah.
You're leaning higher with your nose held.
Yeah, I mean, I just am stacking up a lot of things that are bothersome, but these things have been bothersome for a little bit of a while. But, you know, they become more bothersome because the numbers accumulate more heavily on the side. So, you know, I guess, you know, when we're talking about a week, you know, if we're not going to take out 2460 and if we're going to go after that 2484, then for this particular week, we may get through it again. You know, my concern is that there is, in my view, a stack of things that could become problematic in the next, you know, 30, 60, 90 days. And so obviously I'm looking at a little bit of a longer view than just the week. But if you're just doing it for the week, I mean, just like last week, you know, we didn't take out 2460 and then the week ended up strong. Right now we're starting out fairly firm. So, you know, you can't fight the tape, and the tape has not been very negative on S&P. Transports, you know, obviously lost a lot of ground, going from 9,700 ballpark down to 9,100 ballpark. That's a pretty good hunk of change to give up. But so far, it hasn't translated into a problem for the S&P. So there's no price evidence of a real turn, and obviously you don't want to fight the tape.
Yeah, and for those that aren't looking at a chart here while Jim's talking, and Andrew mentioned it as well, I think that 2484 level, that would be a new all-time high. So we've been bouncing around sideways in the S&P for the last couple of weeks after making that high on an intraday basis. So thank you, Jim. I'll get back to you a little bit more. Andrew, I also cut you off. You were talking about levels, and you mentioned the VIX as well, I think.
Yeah, I mean, right now, you know, I'm looking at I always look at the SPY straddle to imply how much movement they're having between now and the end of the week. So the SPY at the money straddle is the 247.5 straddle is about $1.45. So they're implying basically a 14-point move up or down between now and the end of the week with 4.5 trading days left. It just tells me that we're going to have a really tight range. I love you, Fausto, and I agree with you a lot, but I don't think we're going to rage higher. I think if we go higher, we're going to slowly grind higher.
Okay, yeah, and Andrew, I think it was you that mentioned that we've been in a real tight range for like 17 days now.
Yeah, I mean, I can bring it up on my chart right now, but basically since like July 14th, so 3 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Today's 18th day, and we've been in a 45-point range for 18 days, which is really, really tight. If you look at the daily charts in the last couple of days, I mean, how much have we moved today? 5 points. The average range for an S&P on an intraday basis is 10 to 12 points.
Yeah, and actually, if you're looking at the last 14 days, going back to July 19th,
yeah,
the July 27th bar engulfs everything. The entire range was on July 27th, the high to the low.
Yeah, so since July 19th, we've had a 22-point range.
Yeah, so pretty pretty tight we're moving here, and that's not abnormal for summer months. You get low volume, you get kind of a grinding motion a lot of the time. People aren't making big commitments because a lot of, you know, the bigger traders are away. Personally, I don't think this is all that unusual to be chopping around here for a bit, but there is a danger within it in both to the upside and downside. So I think Fausto brought it up that we could see an explosion higher. When you have low volume, if there is some triggering event, sometimes that can cause outsized moves because there's no one there to take the other side of it sometimes. So let's go to Fausto. Are you looking for a breakout then, it sounds like, Fausto?
You know, like I do agree with you, Mark, what you just mentioned earlier, that the problem right now is we are going to summer times, and this is the real busy time of when summer really kicks in. I mean, I don't know where you are, but it has been awfully cold here in New York. So, you know, I don't think the people going out to the Hamptons are having a great time. But you know, when you get into this time of the year, it is kind of a little bit of slow. The Senate is on vacation, you know, now, so. yeah, like I told you, if something catastrophe happens, then I'll maybe reconsider as a correction, major. But other than that, I mean, it just from what's been happening and looking at the Dow, I know we look at the S&P, but the S&P is really kind of just rolling off that high right now. If it does break that, if we just break just another 20 points, yeah, you can see this thing going up to, definitely going right back up to 2,500. So it just how everything's working out, and seeing with the numbers that came out on Friday regarding about the job numbers and everything else, and the economy and the growth. So I still see it being a positive thing, and there's a lot of the stocks that are following along suit with it. So we'll see what happens on Friday.
Yeah. Yeah, definitely interesting times. Andrew, I meant to ask you. I know you look at the VIX a lot. Any thoughts or insights about the fact that it's been below 10 for so many days over the last month or so? We've had almost as many days below 10, this summer as we have historically ever.
Yeah, I mean, I know the VIX pretty well, and a couple of things I will say about that. When I was in the trading floor for 10 years, we are always taught that if the VIX looks cheap, it's getting cheaper, and if it looks expensive, it's probably getting more expensive. So that's the first thing I would say. So the 10 VIX here, I mean, I would buy it if I could buy the spot. Another thing I'll talk about here is the spot. So the number that you see on CNBC, or I can currently see on my Thinkorswim, is 990. Okay, that's a fictitious number. You cannot actually physically go buy the VIX at 990. You're going to have to buy the future. And as I line up the futures, just using the option market, the August future is at 1120. So the spot and the future will go correlate and line up at some point in the future, which is the VIX expiration. So August is trading 1120. If I lined up October is trading about 1350. So even though you see that 990 print, you can't physically buy that because that's a spot. So it is really trading about 1120 between now and a week from Friday, and it's trading about 13.5 in October. It usually trades like this in backwardation about 75% of the time. So that is kind of what I correlated that. And, obviously I would not be looking to short VIX at all in October or November, later months. I think that, we're going to have a fear at some point where we'll get a spike in the VIX, but you got to always line up with the future of the option.
Right. Yeah, it is a pretty big spread here we got between the futures, which, like you mentioned, are expiring next week, and the actual cash VIX itself, and they're going to collide by expiration there.
Do they expire next Wednesday?
Yeah. So either the VIX has got to go up about 1.5 points, or the futures are going to have to come down about 1.5 points, and most likely it'll probably be somewhere in between, I would think.
Right. I agree with that.
Okay. Anybody else want to jump in on the VIX there before I move on a little bit?
Well, I just wanted to just chime in. The VIX, according to what I've been reading, is about 37 times this year under 10. And that's about 2/3 of all the time in history that it was ever underneath 10. So the complacency is definitely out there. And obviously the prices, as Andrew was saying, are not going anywhere. So one would probably conclude that the market is waiting for some event to occur, and that event more than likely might be the central bank activity that might happen in September. And then, of course, everybody comes back, and then central banks will be trying to do some things, and maybe that would be when the more probable time for volatility to increase. And one other thing on the VIX is the VIX being this low for this long has created something that is kind of interesting to talk about, which is an extremely large amount of people that are shorting vol for the last 18 months and making good money at it. And obviously, as they make good money, they expand their position and expand their position, and it gets closer and closer to the money. And then, of course, at some point, if the market were to correct, it almost acts like a very, very large stop loss. Meaning, if we did start to crack the market, these people that have increased their leverage, increased their exposure, and increased their position size, if we did get a drop, would have to be trying to cover those. And obviously that could create a significant problem in liquidity. And that's how you sometimes get these algorithmic or big moves like you got in January of 2015, excuse me, in August of 2015, or you got in January of 2016, where you have a tremendous order imbalance. And again, the proliferation of shorting vol and all the positions that have been increasing, which means increasing leverage. Should they have to unwind at one time because of an event in September or something like that with the central banks, or some other event like Fausto was saying with North Korea or something, the vacuum to the downside could be fast and furious, like we've seen a few times in the last couple of years.
Yeah, that's an interesting point, and it certainly has gotten more and more popular because it's been such a
winner.
Yeah, it's been a huge trade, right? And anybody that looks at a chart of like VXX knows it's never going up, right? So everybody's shorting VXX, and it will go up at some point. It's not going to probably ever reach all-time highs, but it can go up enough to hurt some people. And when people start getting hurt and covering, and then you get liquidity issues, then some crazy things can happen, like you mentioned.
There's no price evidence of it now, so obviously it's something that doesn't look worrisome right this second. But if you've been around to the rodeo a couple of times, prices can change quickly when they have a reason to.
Yeah. So that's an interesting point you bring up there, and some people should be aware of. You mentioned the central bank action starting perhaps in September. Are you referring to the Fed beginning to take down its the size of its SOMA?
Yeah, I had read or heard that there's actually a number of central bank things that could go on in September, including the balance sheet runoff, as well as some things with the ECB. So there was supposed to be some potential central bank activity that obviously may not be factored into the prices.
Okay. Yeah, no one believes it till it actually happens.
Right.
And that's panic time. Okay, so as I mentioned, for this week, I hadn't gotten to my stuff, but for the most part, I'm looking higher as well. I'm not seeing anything really suggesting a downside edge over the next several days. I've got a few things pointing higher. The InvestiQuant numbers, the odds there all look pretty strong from our acceleration systems, our momentum systems, and our seasonality stuff is all pointing higher over the next few days. So there's no real reason for me to believe at this point that we're on the precipice of a sharp pullback, and so I'm looking to ride it just like you guys. All right, let's. I'll also note that the report that David puts out, every week is getting more and more data in it. So it becomes more and more interesting to read as we get more and more data points, how people are voting and what's happened in the past when that's occurred. And interestingly, this week, more people thought the market is going to head lower than higher. So we'll see what we're worth as an expert panel. Since we're all saying higher, and David's report, the majority, although it's a small majority, is voting lower. He did note that similar numbers have been observed 17 times in the previous 201 weeks, and the sentiment was correct 47% of the time, so not a significant difference, and an average S&P move lower though of 0.03%. So it seems like it's setting up for what is likely kind of break even choppy type stuff, which, if according to the timing research numbers, that would be in line with what we've been seeing the last couple of weeks. So we may get that breakout. We may continue to chop around, it seems. Or we may all be wrong, and the majority voters might be right, and it's going lower. Let's go around, and let me just see if there's anything I missed as far as triggering events that you're looking for this upcoming week, as far as fundamentals, news releases, technicals, other than really a potential breakout to highs, since we've already discussed that. Fausto, anything you've got your eye on for this particular week as far as news or technicals?
Regarding about the news, like I said, we're going into a slow time of the year, so not really that much. I'm more concerned about any bad news coming out. Like I said, healthcare bill is down until they get back, and you have some good numbers that just came out recently. I just see we're just going to trickle up a little bit. I'm just in a couple of really nice swing trades that have been talking about total listeners for the past year, and they're doing great. But listen, there's a lot of things doing great. We're all sitting there putting feathers in our cap how good we're doing right now. But it's all about getting a healthy pullback to see who's really out there and scaring out all the profit takers and who's out for the long haul. But the only thing I'm worried about, like I told you, is just as long as we have no catastrophes come up, I'm pretty good. Doing pretty good looking long. I mean, like, I know Andrew probably would say this, but I haven't really been getting that many people concerned about losing money as much. I'm getting more people that want to get into the business of learning what's going to do this, because listen, the market is, when you look at where we are, it's looking pretty damn good, and I don't see anything that's pushing it back. If this president's agenda does come into play regarding about these tax cuts and stuff, you could see these things going a lot higher. But if he doesn't get what he wants to get on the tax cuts, then you could see some major corrections coming up.
Yep. And with those perhaps major corrections in mind, Jim, you mentioned the overdone VIX trade and how that could really cause some turmoil if things start to if the VIX spikes and the market sells off quite a bit. As an options trader, what are your preferred vehicles to protect against something like that? Do you look to play the options on the VIX ETFs like UVXY or VXX or VIX futures options, or any?
I would probably look to get a like on like type situation. This is just my opinion. Obviously, everyone's got to make their own decision. But the collar strategy seems to be, and I've been suggesting it for people to investigate for a while now, because the upside, has not been tremendous on a lot of these things. I mean, Amazon came out with earnings, and you haven't seen 1050 since. You saw Apple jump up to like 160. And it doesn't seem to be soaring through 160. Now you got to figure, the calls on some of these things are pretty fat, and then you can take that premium and use it to buy insurance underneath. And now you've put parameters on your account. You've got an upside potential, but you've also got a floor. And if the upside potential you've set seems to be a little too low, when and if it goes up towards the strike, you can make another decision on whether to roll it straight up or roll it out. Even when you put the strategy on, you can do a diagonal or a calendar situation. But it seems to me that if your opinion is that the upside, at least in the next 30 to 60 to 90 days, might not be that tremendous, and there could be a risk on the downside because of the many factors that people talk about and the seasonal factors, then it seems to me that you're not giving up a tremendous amount of upside by selling the call, and now you put a floor underneath your equity, and now when you go to bed at night, you have some concept of what your values will be in the next period of time.
Okay. All right. Interesting. Andrew, what do you think of the potentially overcrowded VIX trade? I know you do some trading in that area as well. Do you suggest downside protection on there, or I guess it would be upside protection, right? If it's a short VIX trade, a downside if you're an XIV, I guess.
Yeah, I mean, there's there's a lot of ways to protect a basket of stocks, and one would be buying upside calls. A couple of days ago, I think it was Goldman Sachs came in and bought a truckload of October upside calls, but those could be hedged against a long basket of stocks. So, my favorite strategy, if I was a retail customer, I was scared of the market, I call them zero cost collars, where you have long stock, you buy a downside put, and then you sell some upside call against it for $0 amount. And those work really, really well in a low volatile environment where, are we going to grind higher? Probably, but could the market be down 100 points overnight? I mean, if North Korea does something crazy, it's possible, right? So I always have protection in place. I talk about it all the time that you have protection, you have insurance on a car, a house, jewelry policy, basically anything you could think of. But why would you not have protection against a long basket of stock if you're long? Because stocks do not, Forex trades 24 hours, stocks, close for a while, so they can gap lower overnight. So I like zero cost collars as a retail trader, buying downside puts and then selling upside calls as protection.
Okay. And then while I got you on the line here, anything else you were looking at this upcoming week as far as triggering events or stuff in the news or anything like that? Andrew, that was for. Sorry.
Oh, yeah. We saw call activity in two specific stops for earnings, which I thought were really interesting. One was J.C.Penney. Institutional order flow about 23,000. J.C.Penney 5.5 calls for this week, and they have earnings this week. So that's one that's really interesting. And the other one was LNG, Cheniere. Leon Cooperman just came on TV and said that oil is basically bottomed out, and he thinks oil is going back to 60. LNG has earnings this week. We saw institutional order flow buying about $400,000 worth of weekly 43 calls. So I am long both of these currently. I'm not sure if I'm going to take them off before earnings or not, but I'm up money in both of them, so those are working out well.
I don't trade oil much, but I do buy gas. So.
I'm really good at losing money. I'm really good at losing money on upside calls and oil stocks.
Okay. Our question of the week is kind of an interesting one. It's and hopefully you guys have played in this area a little bit, but David was asking, have you ever bought, sold, received, or otherwise used Bitcoin or any other currency? Bitcoin's been real hot lately. I'm seeing tons of charts and tweets and news about it because it's been on a run. And it's certainly as volatile as anything you get. You get to trade in the stock market or the futures market or anywhere else. So, Jim, have you had any experience with Bitcoin as far as trading it or even using it to purchase things?
No, I don't. There's a couple of restaurants I've seen that have a little sign saying they accept Bitcoin, but I did see on TV, I think on one of the shows over the weekend, that the island of Sardinia has got some type of a swapping exchange currency they created because of the crash of '08, and it's $100 million business over there. So there seems to be some interest in it, but it's outside my pay scale as far as exactly what goes on with Bitcoin.
Wow, I wasn't aware of either of those things. Where are you that you've seen restaurants?
In Las Vegas, where you probably see everything, huh?
Yeah. You're ahead of us here in Massachusetts.
That's right.
Andrew, what about you? Bitcoin on your radar at all?
It's actually really funny that this topic got brought up. So I'm in extensive research mode right now on Bitcoin, Ethereum, on all other cryptocurrencies. So I know a good amount of it. We're going to be coming out with an 8-hour boot camp on cryptocurrencies, how to trade them, what platforms to trade them on, what they are, why trade them. So Bitcoin is the highest market cap of all the cryptocurrencies. There's over 500 cryptocurrencies. They total about $100 billion of market cap. Bitcoin has about 45 billion of the 100 billion, and then Ethereum's close second with about 22 billion. So those two make up about 67% of the cryptocurrencies market. And it's a very interesting concept, and it's basically, as my point of view, it's kind of a hedge against central banks just printing money. So, as we all know, the Federal Reserve can never be audited. So if the Federal Reserve can not be audited, that means they can just, in theory, print as much money as they want. Well, cryptocurrencies are a peer-to-peer system. So it's kind of like it's basically creating a new currency. But I think the phenomenon is great. Bitcoin itself as an investment, I do not currently own any. I've never owned it, but it's gone up for like 66 straight months, every month, if you look at the monthly chart, and it's hit new all-time highs. So like I said, we are prepping a 45-minute workshop that will hopefully be done in a week or two. And then we have a 8-hour, 200-slide PDF presentation on cryptocurrencies, how to invest them, what platforms, how to get charting on them, and everything you need to know. That's
interesting. We're going to have to come back and talk to you a little bit more, and people might want to check that out. That's something I have not gotten into myself yet. I remember several years ago, though, when Bitcoin was first starting to get hot, there was software out there where you could, download it and do like mining on your spare computers even.
Yeah, mine is not harder nowadays. The logic and the linking on Ethereum is supposedly, according to one of the books that I read, is much better on Ethereum, and Ethereum's like, cheaper. It's all like the concept that, Bitcoin's $3,000, even though you can buy like portions of it. Amazon's $1,000, right? If Amazon did a 10-for-1 reverse split to $100, every retail trader would go, oh, Amazon's only $100, now I can afford it, even though it's the same thing. So then they go up and buy it, and that's happened multiple times in splits in Apple and Baidu before in the past. So yeah, it's like the hottest topic right now. So that's why I've been basically researching and preparing, a presentation for it.
All right, great. I look forward to learning more about it. Fausto, how about you? Are you done anything with Bitcoin?
Okay, like Andrew just said, it's a really funny question that came up, and my son actually, he's 17-year-old, and will go into, he's going to be going to college. So he did this class up in Merit's College in upstate New York. And at Merit's, when he came back, because he's learning business management, and he came back, he says, Dad, you ever heard of Bitcoins? I says, no, I haven't, son. He says, Dad, all the kids in school are trading it. He says, the market's like on fire. And I'm like, really? Now, just like Andrew and all of us, we're all traders. So if we don't look at, we don't look at it as an investment. We look at it as to make money as a day's pay. We'll trade anything. We could trade, we'll sell ice to an Eskimo if we could trade it, make money on it, right? So apparently the Bitcoins is, it's very interesting. Andrew, you're going to be doing a workshop on that, because I would like to hear a little bit more about it. But I heard, yeah, I'm just concerned, is it too late to the game? But apparently it's got some huge traction, and everyone, I've noticed a lot of the millennials and young kids are actually been trading it because they deal with Bitcoins all day long, if it's with the gaming or anything else. So obviously they made a currency about it, which I thought was pretty savvy of them.
That's interesting. I hadn't realized it become that popular. Sounds like trading Bitcoins is replacing the old internet poker, right?
That's what it kind of sounds like it, but this is not something that's going to come and go. I mean, they deal with it all day long.
Right.
That's how they actually, how they buy, transfer monies of overseas without dealing with the foreign exchange. So they do with Bitcoins, and also there's to me, I always thought Bitcoins will be a little on a shady side too of what it is and what they use it for. But apparently someone made an exchange over it.
Yeah. So I'm the rookie of the bunch. I really have not explored it too much, but I look forward to learning about it as as more comes out about it, and maybe I'll start with one of Andrew's courses.
It probably, this is Jim, it probably goes with the theme of just challenging the status quo or the standard, the same way Amazon is challenging the way, people buy things, and, the whole theme of challenge the norm, and it probably fits into that theme pretty well.
Yeah.
I'll just make one side note here is, In my opinion, it's going to have a massive correction at some point. How big the correction is, I don't know. Like, I mean, it's kind of like the market now. You just buy it and close your eyes, and that's how Bitcoin is. So I think it's going to have a massive correction at some point. But I'm telling you right now, it's here to stay. It is $100 billion market cap across all cryptocurrencies. So it is here to stay. I think the phenomenon is great. And, you know, I'll be looking for not a one-day event where we have some big correction because you get hacked in, there's a hack overseas or something like that. Because you can get hacked in pretty easily if you leave your Bitcoin on the exchanges. You have protected wallets where you can keep it where it won't get hacked in. So there will be some period where it has a major reversal. Give it a couple days, wait for an opportunity. But I think it's an interesting concept, and it's here to stay.
Is there an anonymity factor that also drives people toward it?
I mean, there's a lot of factors that drive people to it. Like when Maria Bartoloma had her last day on CNBC, there was a $350 million transaction in Bitcoin with zero transaction cost.
Right.
That took about 15 seconds. So like, I know I'm a business owner. We're all business owners here, right? If someone said to me, "Hey, if you take Bitcoin, you can save 3% credit card processing fees," would I want to put an extra 3% in my pocket? Yeah, sure. That's too, so it was initially, meant for the Russian mob, supposedly with arms deals. But the point that anonymous, you can use that too. But like, I'm going to start looking into it if I can accept it, because 3% is 3%, Yeah. It's a lot.
And beer used to be connected to the Capone mob, so obviously that made it out of that negative news, right?
Yeah.
I actually saw a graphic today showing that $10,000 invested in Bitcoin in July of 2010 would now be worth over $380 million.
Oh my God.
Yeah.
So makes you wish you did something else with the 10,000 7 years ago.
What about just $100?
Right.
Yeah, right.
Forget about the 10,000. Just $100 just to see what happens. Going out to dinner tonight and says, "You know what? I heard about it." You always want to dabble here and there, but then the next question is, would you have taken your money off the table, 2011? So that's a hell of a return.
Yeah, it's like everybody bought Apple at 8 and then they sold it at 20. Like no way you're holding that.
Exactly. Yep. All right, I think we've covered all the standard questions for today. Actually, I got one for you guys. We were talking earlier about the VIX and what low volatility we have now, and some of that's pretty standard for the summer. But I've the VIX being this low is not standard, and part of because we've been under 10 so much this year. Which we've never been in the past. And the VIX measures, where the options believe are going to be on a percentage basis. And one of the theories I've heard is that because futures are traded in points, that the volatility has been shrinking partially, because $50 a point 10 years ago is still $50 a point today for the S&P 500, right? So there's still that $50 a point movement, and for intraday traders, they need a certain amount of volatility to be able to play, and they're willing to take money off after they make a certain number of points, and that's kind of helping to contract volatility overall when it's measured on a percent basis. So average true range of the S&P hasn't changed dramatically, despite the fact that the S&P has risen dramatically. Anybody got a take on?
Well, I just wanted to throw in. Yeah, I just want to throw in something on the. The VIX has a lot to do with implied volatility. And right. If you look at an S&P that's been in a 6 or 7% range in the last 6 months and a 3 or 4% range in the last 3 months, and I think Andrew said it's been in a 2% range or whatever, you're talking about something that has had not much volatility. And so with the VIX, it's not a predictive capability, predictive indicator as far as I'm concerned. It's telling you what has happened, and because of what has happened, they are indicating that that is going to continue. So the reason the VIX is this low for so long, one of the main reasons is the market itself has been in a relatively tight window for a pretty darn long time. And so it is reflective on what has happened. It's not supposed to be telling you what is going to happen.
Exactly, but do you buy into the idea that maybe it's happening because point values haven't changed?
I think it's happening on a number of factors. One is what I just mentioned. Another one would have been the extreme big jump in passive investing. There's a lot of people who just go down there and they park their money in these ETFs, and then they go fishing, and they've been convinced that the way to go is to go into an asset allocation mix, pay nothing in fees, and sit there and let the market go up or down, because ultimately it will go up. And so the amount of money that's gone into that theory has gone extremely large now. So the amount of people jumping in and out has been reduced quite a bit as well. The problem is with the big jump in retail accounts that we've seen, with the big complacency thing that we've seen, and with the situation where it doesn't seem like the market can ever go down. And these passive investors, are they passive or are they asleep at the wheel? It seems like you've got a fairly good setup here that if anybody came in here with negative news or an event people weren't expecting, that a liquidity imbalance could happen pretty quickly, and that's the risk. Right now, there's no price evidence of that, so there's what may worry out there. But I think as far as the VIX is concerned, the lack of volatility in the underlying and the proliferation of passive investing are probably two major factors.
All right, thanks, Jim. Andrew or Fausto, you want to jump in on that?
Fausto, I'll let you go first if you'd like.
No, I'm actually pretty good. That's fine. I mean,
I can always talk. Yeah, I mean, so one of the definitions of the VIX is how much intraday movement you have in S&P 500 futures. And, I am an option premium for the most part because I'm watching institutional order flow. And we all know, as a generalization, as the market goes up, implied volatility goes lower. So, and I always say when I buy out of the money calls, I need FAR, fast aggressive move in the right direction. If not, these options just, A, they decay away. Number two, implied volatility just gets sucked out of these options. So from my point of view, one of the definitions is how much intraday movement. And we just talked about how we've been in a 25-point range for 11 trading days. I haven't looked at the institutional order flow in the S&P in a long time. I know about a year and a half ago, there was a huge 1x3. It was like some $50 million bet where some fund basically bought one and sold three. So they're just selling implied volatility. And that's when the market just grinded slowly higher. And whoever the institution that put on that trade just absolutely killed it. So, if premium keeps getting shoved down a market maker's throat and he's a long premium, he needs movement intraday to scalp the gamma against his long premium and just not getting it now. So one of those definitions is how much S&P moves in an intraday basis. And we've been in a 6-point range today when we usually move 10 to 12 points. I don't think it's due to the fact that we haven't changed per se dollar amount values, but we're just not getting any movement. It's hard.
Yeah, I'm not sure what to make of that theory either. I find it interesting, but I'm not sure I buy it. Okay, we're getting near the end here, so why don't I go through and let you guys give a kind of a last word. Tell us anything that's going on with your site, and if you have a trade idea that you want to discuss. Fausto, I've been making you go last all the time, so you can go first here if you want.
Well, I appreciate that. Well, just to let you know, we have August is obviously a slow time of the year, but we have a lot of big events. I'm actually doing one with Andrew. We're going to be hosting an on-site event in Chicago with seven of some of the best educators in the industry. So that's coming up. We got Las Vegas that we're going to be also be there in November, and with Metastock too. So we got a lot of big events. That's usually when everyone wants to start learning. Honestly, I tell everybody that's the worst time to learn. You should start learning in August so you know what to do when September comes around, because that's the best time of the market.
Yep.
You want to know what to trade, not learn how to trade at the best time of the year. But we do got a lot of big events that are coming up, so everyone should be looking forward to seeing that. Especially come back from the summer. Also, yeah, I mean, listen, I've been telling you guys for a long time, been on the show, that I've been a huge fan of Ferrari. Race has been a unbelievable trade for me. All my traders have done very well. I think since I've been on here, I told you guys about it at 50. Right now it's at 110. I'm still a very strong buyer of it. It's just so funny, but I was at my country club the other day with all my fellow traders, and a lot of them didn't even know there was a public company, and they noticed, and they couldn't believe it because of the volume is traded so low. So I'm still a big, not more or less being a day trader is one of the big things we do, but sometimes we do have some investors and some swing traders in here and some option traders that want to know, well, if you want to look for leverage or whatever, that probably is our best bet. And like anything else, you got to learn before you can earn, and that's what's great about you guys being here. So thanks for having me again. Look forward to the next one.
Thanks, Fausto. Always great getting to talk to you.
Same here.
Andrew, how about you? We already learned some stuff that's going on. You got the cryptocurrency stuff coming up at Alpha Shark. Anything else you want to tell us about?
Yeah, I can always talk. So yeah, two big projects I've been really working on first is the cryptocurrencies and Bitcoin and Ethereum course, which will be, as I said, an 8-hour boot camp. And then the other thing I've been working on is Airbnb. So Airbnb currently is a $31 billion company. They're worth more than any hotel chain, including Hyatt and Hilton. They just did another round at $1 billion to get up to 31 billion. So I'm currently writing a book on the Airbnb business model. Have done a lot of podcasts, started to invest in Airbnb properties because the cash on cash return is incredible. As someone, who had a successful career on the trading floor, I'm always looking for alternative investments. And, with the 10-year being 2.2% and me not being a buyer of the market up here, I'm looking for alternative investments. So I'm in extensive talks with one major network to get my own show on Airbnb business model, which hopefully will happen in the next couple of months. And I'm writing a book on that as well. So kind of veering a little bit from the trading, I sit here and watch the market trade and it's not really moving that much. But I 100% agree with Fausto on the fact that you should be learning how to trade when the market's slow, because you can't really learn how to trade when the market's volatile and whippy. So when we have these days, like I'm watching the S&P is like watching paint dry right now, you should be, having time to take, having one-on-ones or having education or having mentoring when it's slow. So when it does pick up, because it will pick up again, because it's the stock market, you're prepared for that.
Exactly. Good points by both of you there. Good luck with the show. That sounds awesome.
Thanks, buddy.
Jim, to you.
Yeah, a couple of option strategies that I think it would be worthwhile to focus on, and I've been saying this for a little bit of a while. On the good side of the stock market, TINA, there is no alternative, is still alive and well because the 10-year note is trading 2.25, and the inflation numbers on PPI Thursday and CPI on Friday probably are going to stink. Also, on the good side, we got a liquidity tsunami that everyone is not talking about, but seems like it's in the room, and that's the repatriation of all that money overseas that could go to stock buybacks, tax reform and tax cuts, and then, of course, looser regulations on leverage lending, which could be a big factor at the end of the year. That could give a lot of liquidity to the market, and that's one of the reasons probably that it's having a hard time going down. And there's no price evidence of it really having a sustained drop. Last week's low, 2460, last month's low, 2400 are pretty key areas. On the not so good side, the complacency is off the chart. The VIX is just telling you that the complacency is off the chart, and the amount of passive investing going on is also extremely high. We're going into a seasonal time between now and October where sometimes the market can get rough. And, we don't know if gridlock's going to hit the tax stuff like it hit the healthcare. And we also don't know that the central bank news that'll come out in September will all be positive for the market. So having said all that, a couple of strategies that I would focus on would be the collar strategy, which I brought up earlier. And then I think, Andrew supported that concept as well. That's a strategy that might be very helpful to you looking forward. And then, of course, strangles. If you want to take a limited risk speculation and go out in time, that might not be a bad way to go, combining the calls and puts at the same time. Another thing is when you price out options on the long side in particular, you might want to price them out 3 months, 6 months, 9 months, 12 months. And you may see that the premiums are not that substantially different to pick up a whole lot more time. And of course, when you're on the long side of the options, you know, time's working against you. So having more time might be not a bad thing. And if it doesn't cost all that much more money, it might be something that would be worthwhile. So my encouragement is to look into these strategies of collars and strangles now. And then when you do price out some long positions on options, do price them out as out in time as the price differential may be favorable. So that's a couple of things that I thought might be worthwhile for people today.
All right, great. Thanks, Jim. Thanks, as always. Great getting to talk to you. Again, I'm Rob Hanna from InvestiQuant. And if you need to reach me, you can get me at rob@investaquant.com. Also, Quantifiable Edges, you can get me at support@quantifiableedges.com. One trade idea I got for everybody is AGN. That's Allergan. It's in a pullback, and that pullback accelerated on Friday, and it looks poised to bounce. So I'm looking for a bounce in Allergan over the next 3, 4, or 5 days. I would probably sell it when it moves above its, say, 5 to 10-day moving average. I'm just looking for a quick bounce to make some quick bucks in that one, and as a swing trade. A couple exciting things we have going on InvestiQuant right now is I developed overnight strategies when I began the Overnight Edges website, and they've the strategies are much the same right now, but we've evolved our technology to the point where they can actually be auto-traded at some brokers. So we've just released our Overnight Edges auto-trading capabilities. So you can learn more about that at InvestiQuant.com, and some of the strategies I have in the Navigator newsletter are also going to be available for auto trading sometime in the next several weeks. So those are some of the things I'm working on at InvestiQuant, and feel free to contact me again, Rob@InvestiQuant.com. David, thanks again for having me back and putting together such a great panel. Looks like we finished on time today for once.
Yeah. Great show, guys. So just want to remind everyone watching, be sure to hit the subscribe button on YouTube to get updates on future shows. Also, join us next week. That'll be August 14th at 1 p.m. Eastern Time. Lance Ippolito, Barry Rosen, Simon Klein, and Matt Buckley will be on that episode. And I just want to thank all my guests again for this week: Andrew Keene of AlphaShark.com, Fausto Pugliese of CyberTradingUniversity.com, Jim Kenney of OptionProfessor.com, and Rob Hanna of InvestiQuant.com. Thanks, everyone.
Thanks, David.